Good morning. We are letting some participants come in and join us. And as we're going to wait a minute or two to get started, but we will get started fairly soon as we have a full agenda this morning. There's a question already. Is it being recorded? It is being recorded. Yes. Okay. Well, I think that at 10:02, it's 10:01 now, we'll get started just for the sake of getting going, and then people will join us. But good morning. Okay, it is 10:02, so let's be respectful of people's time. Good morning, everybody. I am Santiago Marquez. I'm the president and CEO of the Georgia Hispanic Chamber of Commerce. It's a pleasure to have you guys with us. As always, please refer to ghcc.org for information on COVID-19 and everything that's related to that, whether it's health or financial. This morning, we have a full agenda, so let's get started right away. I'd like to introduce a good friend of mine, and I consider her and her team community heroes for the work they've been doing during this crisis, especially for small businesses. I'd like to introduce Carolina Ramon, who is the Director of Minority Outreach for the Small Business Development Center for Georgia. Carolina?
Thank you, Santiago, and good morning, everyone. Thank you to the Hispanic for this opportunity. And today, I want just to let you know how it's going to be the agenda. So basically, Glenn Cruz, our speaker for today, and I will have the pleasure to introduce him in a few minutes. We will cover all the information regarding the PPP forgiveness and an overview about updates and most recent changes in the next 30 minutes. So from 10 to 10:30, we will cover all this information, and from 10:30 to 11, please feel free to submit your questions to the Q&A. The chat is disabled. So as Santiago Marquez mentioned before, my name is Carolina Ramon, and I'm the Director of the Office of Minority Business Development for the Small Business Development Center. So if you are not familiar with the Small Business Development Center, the UGA Small Business Development Center, we have 17 offices across the state, and we provide business consulting and training and no cost. So please feel free just to connect and look for us at the www.georgiasbdc.org. And we always recommend you that you visit or reach out to your closest SBDC. And today I have the pleasure to introduce my colleague, Glenn Cruz. He's the director of the UGA SBDC office in Gwinnett. So Glenn will speak about the PPP forgiveness, and please don't forget that we will answer all your questions under the Q&A. So Glenn, welcome. You are on mute, Glenn. Glenn, you are on mute.
Thanks, Carolina. I don't know if you realize, but I actually checked out for a second my internet connection, so I've jumped over to my hotspot. Hopefully that will hold up for this meeting, since my Wi-Fi seems to be a little jinky here this morning. But thanks for the introduction, Carolina. It's a pleasure to be here, and look forward to sharing with you some information about what's going on with the PPP program, what the status is, changes that have occurred to that, and most importantly now, as we're moving past the funding source and the use of funds into what the loan forgiveness program looks like. And there's been some modifications to that as well. So again, I appreciate the opportunity to address the group here today, and we'll leave some time at the end for some questions. So let me jump into the presentation. So we are going to talk here today about kind of three different things. The PPP itself, which is the sort of base loan program that was part of the CARES Act, the PPP Flexibility Act, which passed on June 5th, which added some, as it says, flexibility to the PPP program, and then revisions to the loan forgiveness that we just literally received from SBA yesterday. let me do a little advertisement if I can here for Small Business Development Center. Carolina is my colleague and good friend who works in our Office of Minority Business Development. I'm the area director for the Gwinnett office. We're co-located with the UGA campus in Gwinnett off of Interstate 85 and Old Peachtree Road. We're funded partly, 50% of our funding is from SBA, and then matching funds come from the University System of Georgia. So we are funded by your tax dollars, both federal and state, and we provide no-cost consulting services for you because our grant dictates that we provide those services to small businesses at no cost. So if you have any questions about your business, either in the COVID sense that we're in right now, but in the aftermath of that, seek us out. We've got 17 offices around the state. Carolina has the great joy or pleasure of being able to work with all 17 in a complementary nature when it comes to minority business development issues. My focus is in the Gwinnett area, and Gwinnett, I call it Gwinnett-ish. So let me address one thing right off because actually Administrator Carranza reiterated this in a press release the other day that the SBA and Treasury set aside $10 million for the community development financial institutions to provide loans, and that was done to enable funding for smaller and low income areas. So they had loaned $3.2 billion in round two, and they were given an additional $6.8 expressly for them in this round. And so those funds are out there now. And so if there's a small income area that hasn't been able to get access to PPP loans, this was made available. And here's a link for that. You'll get a copy of this presentation in the aftermath of the presentation. But I wanted to point this out because this to take advantage of the PPP funds. I'm going to say this several times during this presentation, but there's a June 30th date out there, and I want to be very, very clear about this. The June 30th date is not the last day for you to apply. It's the last day for SBA to issue those loans. So if you haven't filed for a PPP loan, you're thinking about it, I would say take action quickly. Because the June 30th is not an application deadline. It is a funding. It is a verification authorization deadline. So you really need to be thinking at least a week in advance. And for example, I got a notice from Truist, the BB&T SunTrust post-merger company, that they were going to cease taking PPP loans tomorrow on the 19th. So lenders are going to start backing away from the PPP program, starting to look at additional programs like this. I want to introduce this loan facility. Main Street Loan Facility is basically is targeted at small and medium-sized business. So actually a little bit on the larger side business than what PPP and EIDL was targeting. You can see, just look by the numbers here, 15,000 employees, $5 billion in revenue. Those are pretty good sized companies. They're really targeting established businesses with strong 2019 cash flows. These are very favorable terms. It's based on LIBOR plus 3%. They extended the term of those loans to 5 years just last week. And it's got some nice deferral aspects to it. 1-year deferral on interest payments, and there's a 2-year deferral on any kind of principal payment. So this is a very cash flow positive, friendly solution if you're an established business and PPP or EIDL was not, you just didn't get enough out of that to be able to recover from this crisis that we've been in. Minimum loan size on these are $250,000. When this program first rolled out, the minimum was $1 million. They dropped it to $500,000, and they've now may qualify by dropping this minimum loan size down to $250,000. Hey, sorry about that. Hopefully I'm back full-fledged here. Looks like my internet connection wigged out on me a little bit. Can everybody hear me? Can I get a Ish or Carolina? Can you just register in and make certain everybody can hear me?
Yes, we can hear you, Glenn.
Okay, my apologies. I think I probably dropped about on this slide here. Talking about the Flexibility Act. It was signed again on June 5th. So it is fairly contemporary. Modifies that existing loan program. It extended the covered period. And that's that period of time after you get funded and then you keep track of your expenditures of the PPP loan and you're tracking that information for the purposes of getting loan forgiveness. And we're going to talk a little bit more about that in some subsequent slides. But it extended that covered period from 8 to 24 weeks. This is something that people have been asking for and was part of this Flexibility Act. It also extended PPP loan terms from 2 to 5 years. The original loans were 2-year loans. It's now been extended to 5 years, but there's a caveat here. So I want to make very, very clear about this in the next 2 bullet points where that 5-year program actually applies. It only applies to loans issued after June 5th. So the 5 years is only automatic if you're getting a loan after June 5th, after the Flexibility Act. They could not go back and modify the terms of loans prior to that because that loan is not, SBA is not involved in that loan other than underwriting it for the lender. The loan is between the borrower and the financial institution. So what they did provide is some flexibility in there. It does not require, because it just frankly could not, but it does permit lenders and borrowers to mutually agree to extend the term from 2 to 5 years. So I would expect that as people go in for loan forgiveness, that some of the lending institutions will be extending those terms, but it is not a mandate. It is not mandatory. So it is a question that if you already have an existing PPP loan that was in place before June 5th, you might want to talk to your lender about whether they're going to do the extended term to 5 years. The other thing they did, which is important to note, and we're going to talk about this on a timeline that I've got later in this presentation, extended the deferral period from 6 months to 10 plus months. And I'm going to talk about that 10 plus months because that plus is actually a fairly big number. So I've got a little timeline, I think it'll illustrate what that is. So originally in the original CARES Act, the original PPP loans had a 2-year deferral period, and then you had to start paying on that loan. But because they added that 24 weeks of covered period, that almost extended through that 6-month deferral period. So they've taken that deferral period now and they pushed it out, and they pushed it out pretty significantly. The other thing they've done, which is something that people were asking for, is they reduced the minimum payroll requirements, the funds that you have to have in your loan forgiveness. Used to be you had to have at least 75% of that loan forgiveness had to be in payroll expenses. They've now relaxed that down to 60%. 60% payroll related expenses, 40% non-payroll expenses. So they've done a balance there. So they've extended the term, the covered period, and they've relaxed the minimum requirements. So some nice features in the Flexibility Act, actually appropriately named. They've added great flexibility to the PPP loan program. What happened yesterday morning, I saw it released about 8:30 in the morning, is SBA issued what they call an interim final rule, or IFR 19. That's the 19th adjustment that they've made, or clarification they've made to the PPP loan. So you can see it's a very dynamic program that's out there. They released this yesterday morning. And what it does is modified IFRs that were out there before that had clarification about loan terms and how you calculated forgiveness. Those were IFR numbers 3 and 4. And before we get into the whole IFR numbering thing here, I will provide a link at the end of this presentation where if you want to, you can have access to the SBA documents on IFRs, and you can go read through those if you'd like to. I'll provide those links, but what I wanted to do is summarize really what changes were made with this interim final rule number 19. I know sometimes I find the term interim final rule kind of a bit of an oxymoron, but the reason it's actually called that is they're required by law to post these rule changes for 30 days before they can become final. However, given the timing we are in right now, you can't wait 30 days before you issue the rules and start abide by. So they have taken this step of doing an interim final rule. So it's posted up there for us to use. It will become official in 30 days, but you can rely on this IFR right now. So that's why that term is out there. What the IFR, what the 19 does is modifies these original final rules that were issued out there that integrated the changes of the loan term that we talked about, that 5-year component, and the forgiveness calculations that resulted as a part of the PPPFA, that Flexibility Act. It also clarified, it limited the amount of owner's compensation. That is the amount that if you're a sole proprietor, for example, or if you're an owner and you're taking an owner's draw rather than paying yourself, you're taking funds out of your money like in a pass-through, like in an LLC, or some S-Corps can do that. It limits the amount of owner's compensation you can claim to 2.5 times your 2019 monthly average. There's a reason they did that, and it's because there are some exemptions that were in there as well as far as your requirements to return to full employment. And they felt that there might be an opportunity for an owner to manipulate the situation to their advantage. So they put this restriction on it. Now, if all you were as a sole proprietor, as you went out for a PPP loan, that 2.5 times your monthly average should have been your loan amount. So you should be able to achieve that and still realize full forgiveness, despite the fact that they're basically limiting you to 2.5 times, which is really about 10 weeks versus the 24 weeks. Expect more clarification about this. The other thing this does is we've covered earlier is it extended that covered period to 24 weeks. But it also allows you, if you had a loan before June 5th and you were managing towards that 8-week horizon and bringing your employees back to make certain that you had made full, could take full advantage of the loan forgiveness, and you were basing it on the 8-week period and you were trending towards being able to do that, you can still opt to use the 8-week period. So they didn't take that option away. They just give you the option to go to 24 weeks if you want to. So this is now at your discretion. As the borrower, you can make that decision. It's not put on you by anybody. It is your choice on how you want to do this. They also issued revised loan forgiveness forms. Those were released yesterday as well. It modified those loan forgiveness reforms to reflect those changes that were made in the PPPFA. It added a short form. I actually jokingly said that they must have been listening in on a conversation I had with a client, because I was talking to a client who fell into that sole proprietor role. And I said, oh, good news is you have 24 weeks to calculate your time frame. And you know what, would really be great if SBA would come out with like a 1-page form for somebody like you, because you are, to return to full-time equivalence, you just need to be working yourself. You only have the one employee, yourself. And lo and behold, the next day they issued a form 3508 easy. So they fulfilled my one wish that I had with regard to getting to a shortened, expedited form. And it actually applies to not only self-employed people with no employees, or if you didn't reduce your salary or wages, if you were able to maintain your employee base and you maintained your head count and you didn't reduce the number of hours that they used, you can use the EZ form. Or they didn't experience, and this is, you don't have to meet all 3 of these, you have to meet one of these 3 criteria. If you experienced reduction in business activity as a result of health directives related to COVID-19, but you didn't reduce the salary or wages by more than 25%, in other words, you may have cut back on how much you were paying people, but not by more than 25%, then you can use the short form. And it does simplify the calculation and the process significantly. So this is a nice feature as well that they added yesterday with this announcement. So where are we with PPP? Let me take you through the evolution of this, of the terms of this loan. When the CARES Act was enacted back on March 27th, which seems like 2 years ago, although it's just really a few months ago, it came out as a 1% interest rate. The term was 2 years. The deferral period was 6 weeks. And that covered period, that period of time after you got funding to where you collected your data and then pulled it together for loan forgiveness, that was limited to an 8-week period. And that started the day that you got funds provided to you. And the loan forgiveness were restricted to payroll expenses of 75% minimum and non-payroll expenses of 25% maximum. So you had to have at least 75% of your loan forgiveness ask, what you filed for loan forgiveness, that amount needed to consist of at least 75% of payroll expenses. They modified that in the Flexibility Act. So those modifications were the terms went from 2 to 5 years. That deferral period went to 10 months plus. I've been teasing you that I will give you the information on that. I will shortly. The covered period went from 8 weeks to 24 weeks. And that loan forgiveness limits were relaxed down to 60% minimum and 40% maximum. So now where we sit is on that far right column is where we sit out here for people who have PPP loans or are contemplating them is still 1%. If you get a loan after June 5th, when the Flexibility Act passed, it'll be a 5-year term. Anything before that is 2 years. But again, if you and your lender agree, you can modify that to 5 years. But that's where we're sitting right now. There will be a combination of 2 and 5-year term loans sitting out there. The deferral period now is 10. That applies to everybody. The 10 months plus applies to everybody. The covered period applies to 24 weeks, applies to everybody, unless you opt to go to the 8-week period. So you don't have to do that, but you can avail yourself of the 24-week covered period. Payroll expenses now are 60/40, regardless of which type of loan or when you got your loan. So that right-hand column is really where we are right now, the evolution of PPP. Now, again, want to note that the deferral period, and this is a segue into the next slide, this new deferral period of 10 months, up to 10 months, begins at the end of the covered period. It does not begin at the time of your loan. That's what the original 6 month deferral period. That's actually a typo in there. It was 6 months that was deferred. My apologies for that. I didn't catch that earlier. I'll make that change and send that back out to Ish before we distribute this to you. That deferral period was 6 months, but it started when you got your funding. Now that deferral period starts when you end the cover period. So remember now, what we did is we went from, if your loan, here's an example, if your loan is dispersed on June 25th, that 24-week period ends on December 10th. So that's your covered period now to go through December 10th. You have until October 10th of 2021, so that is over a year from now, to apply for your loan forgiveness. If you don't, then you've got to start making payments on that loan as it was written to you before you asked for forgiveness. So what does that look like on a timeline? It has pushed this deferral period out for a significantly different period of time. You can see it is pushed out for almost a year longer than it was before. This February 15th date is kind of a sacred date and basically in everything. It's an indication of you needed to be in business before then. You needed to have your obligations in place before February 15th. For all intents and purposes, what the SBA has defined and the law defined is the last day for a PPP loan system to be in the SBA system. I'm going to pause again and say this is not the last day for an application. This is the last day for SBA to approve them. So you've got to apply before that June 30th date. That's an SBA date. That's not your date as a borrower. So again, to use that example that I have up here in writing is in that 625, let's say you get a loan on the 25th of June, you'll have that 24-week period for you to collect and spend that PPP money and ask for forgiveness. That'll take you through December 10th. That is when this 10-month period begins for you before you have to file for your loan forgiveness. So you actually have 10 more months after that before you file for forgiveness. Until you filed for forgiveness and until the bank has then asked SBA for the forgiveness amount that you've requested and the SBA has authorized that, until the SBA authorizes that for your lender. So there's a period of time after October 10th that your lender and the SBA are going to go through some exchanges of information and exchanges of monies. When that happens, that's when your loan will be due. So actually, it won't even be on October 10th. It'll be some period after that. So I want to point that out, that this deferral period is actually going to be elongated as a result of the Flexibility Act. In my opinion, I think that's why lenders are probably going to extend the terms from 2 to 5 years. Because you can look at this and you piece these numbers together and you can almost bump up to a 2-year deferral period if in fact they take full advantage of the time they have to exchange data between the two, between the lender and the SBA. So I fully expect many lenders to extend their loan terms here just because of the fact that the deferral period and the coverage period has been bumped out so dramatically. So I wanted to talk a little bit about the covered period here and some key dates that are that you need to be aware of. I know this slide's a little bit busy, but bear with me while I try to step you through it. Again, this is that the February 15th date. That is also a date where you're going to do your wage reduction baseline period, where you're going to take a look at how many employees did I have in that February 15th timeframe, and you're going to use that for your calculation of what they call a safe harbor date. Now, what that safe harbor date is, they're saying is if you return to the same number of full-time equivalents, and full-time equivalent is the number of hours somebody works divided by 40. So somebody who works a 40-hour week, that's a 1. Somebody who works a 30-hour week, that's a 0.75, and on. You can do the math from there on out. As long as you return to that same level of employment by that safe harbor date. Now, that was originally March 30th. It's now been pushed out to December 31st. That's the revised date as part of the PPP-FA. As long as you've returned to full employment by that date, there'll be no reduction in your loan forgiveness. You've got this, again, I'm carrying on this June 25th date. This is your loan forgiveness period where you get to collect those 24 weeks of data, the 24 weeks of spending before you apply. Will run up through the December 10th timeframe. It cannot extend beyond December 31st. And effectively, because the loans aren't going to come out after June 30th, effectively, that's kind of built into this 24-week period as well. So these are kind of some of the horizons. You can see we've elongated this whole process and giving you more time to spend that money and more time to get to full forgiveness or a significant level of forgiveness. The other significance of this PPP-FA signature date is loans from this period on were 5 years. Anything prior to that was 2 years, with, again, that exception that if you can negotiate with your lender to extend that, you have the ability to do that as well. So kind of summarizing that through that, and I want to be able to answer some questions here and leave some time to do that. But key things to remember, key takeaways. I think I've hit this 3 or 4 times. I'm going to hit it one more time. June 30th is the loan authorization deadline. It's not an application deadline. I'll let this go at this point in time, but I did want to drive home this point because it was important enough that the administrator actually put out a press release reiterating this. That June 30th is the date your loan has to be active with SBA. There's some paperwork and there's some machinations that have to go between the lender and the SBA behind the scenes that we don't need to get bogged down into. But the point is that loan's got to be approved and authorized by SBA on June 30th. And so I would say don't go beyond the 23rd. Give yourself at least a week before, if you're thinking about applying for a PPP loan. The other thing I would say is if you're thinking about applying for a PPP loan, you think you might want to do it, but you haven't made your mind up yet, go ahead and apply. Because there is no fee for doing so, and you're going to get a chance. They're going to come back to you. You've got to sign a loan document before they'll ever fund it. So you have the opportunity to decide you don't want it, but what you can't do is get into the queue if you run up too closely to that June 30th date. So if you're thinking about it, my suggestion is go ahead and apply. There's just no downside to it that I can see. I've said this, I've been doing presentations like this in multiple forums since the PPP program came out. And now that they've actually extended the loan forgiveness timeframe from 8 to 24 weeks, getting the loan forgiveness is probably not going to be too difficult for most people to achieve. But still, don't let your appetite for loan forgiveness lead you to make bad business decisions. In other words, don't spend that money just to bring people back to get loan forgiveness. It doesn't make good business sense. And how do you get to that decision point? Well, check out, come and contact me or one of my colleagues. Contact Carolina. She'll refer you over to someone maybe who's close by where you're operating. We can help you go through a cash flow projection and make certain that you understand that if you don't get full loan forgiveness, a 1% loan that's got a deferral, like PPP does for a period of time, still not a bad working capital loan and and as long as you continue to use that for payroll, even if you can't get total forgiveness, I would say make certain that you don't run out of cash just because you wanted to get loan forgiveness. So that's my, I make that admonition pretty much throughout every time I do one of these presentations. So that's the last of my soapboxes that I'll stand on today. One other thing is, as you're going through this process of loan forgiveness and calculating and collecting the data about payroll and your non-payroll expenses that you can include in your PPP loan forgiveness. Now, those include things like rent, if they were in place before February 15th, interest, no capital, but interest on any kind of mortgage or any kind of financing vehicle you had in place before February 15th, and then utilities that you had a commitment on before February 15th. And this could include telephone, electric, water, those types of things that are traditional utilities. So as long as you track all of those things and document them, and then you retain them, you'll be fine. But do make certain that you document these costs, because they do have the option. SBA doesn't have an option to come back and audit or question your calculations. And so they maintain proper documentation. So if they do come back and say, did you really spend this money on this many employees during this period of time? You can basically say, yes, here's my documentation on that. There is a retention requirement inside of the law, and it is 6 years after your loan has been repaid. So if you got a 2-year loan, you've got to do 6 years after that 2-year loan. If you got a 5-year loan, you've got to maintain it for 6 years after that 5 years. So document, and then put that away somewhere in retention, just in case anybody ever comes back and questions your numbers and how you achieve those numbers. So these are sort of 3 key things. I know one of them is redundant, but I can't, I just can't emphasize enough the need for some documentation. And then lastly is, I don't think we're done with guidance on this. I think there will be additional ones as people start to calculate some of the dates that are out there and make decisions on it. Because the Flexibility Act has been around for a short period of time, and the new guidance on loan forgiveness calculations and the new forms have been out since yesterday. I really think we're going to see some additional clarification. I think it's going to be clarification. I don't think it's going to be substantive changes, but there will be some additional clarifications coming. So stand by and look at that. Now, where can you do that? Here's an SBA document site where you can track pretty much every document that they release. You can go to this site and you go down to loan forgiveness, and you'd be able to download the loan forgiveness application form. And they have a version in Spanish there as well. So this is what I call the SBA document clearinghouse site. So, and again, you'll get a copy of this presentation in the aftermath of this webinar. And these links will be hypertext links, so you can just follow those to that site. You can also keep track of what's going on with IFRs if you're into that. This is also there on this SBA document site. The other thing is Treasury and SBA maintain a frequently asked questions for PPP. I suspect there's going to be some modifications to that too now, as we're looking at the new rules on loan forgiveness. They have not updated that particular FAQ document since May 27th. Now, I looked at that before this presentation, that was the date, but then I got up yesterday morning and there was no modifications to the loan applications. And then about 30 minutes later, there was. So that's how dynamic things are inside of this whole PPP program. So this is another site for you to go look at. If you have questions about what's allowed, what can I do, have there been changes, you can monitor this Treasury FAQs. One of the nice things about this particular document is in the upper left-hand corner, there's a date, the last time it was revised. So if you looked at it like I have, I look at it almost daily. I just go and look at that check date up there. And if it hasn't changed, like I said, the last time I saw that it was May 27th, I don't have to go and look to see if there's been any changes. So they're keeping a revision date out there for you as well, just to simplify it. So you're not having to read through, because I think the last one I looked at, there were well over 40, almost 50 FAQs in there in 17 pages. You probably don't want to read through that every time. So it is actually incremental, but they're updating the data on there. So keep these links handy. So with that, I can see there's been a few questions that have come up during the presentation. And let me get back here. And again, I apologize. I think I cut out of there once and maybe even twice during this presentation. So hopefully we didn't lose anything. But I know, Carolina, you've been kind of looking at the Q&As that are in there. Do you have any questions that have popped up or anything I can clarify?
Yes, yes. I have a question here, and just give me 1 second. This question is regarding the amount that can be forgiven. So can 100% of the amount of the loan can be forgiven?
It can, yes, yes, provided you operate within the permissible uses. And again, let me just recap those. Payroll expenses are things like, direct payroll, but then payroll related expenses. So some of the vacation expenses, if you've got retirement provisions inside there for your employees, that's all listed in the permissible uses. In fact, I will also send along a separate line diagram that's got a diagram. It's page 3 of this document I'm going to send you. And it compares PPP and idle permissible uses, so you know where you can use what you can use those particular loan funds on. So I'll send that back as a document for you to have as well. I'll send that to Ish, and she'll send that out as a follow-up in a PDF form. So you can take a look at that and you can see what you can include. So as long as you're operating inside of those permissible uses, payroll expenses, and then on the non-payroll expenses, there's really 3 categories. It's rent, it's interest only on capital financing that you've got in place. So that could be vehicle or equipment financing, or it could be physical real estate financing. But you can't pay principal, you can only claim interest. And then thirdly is utilities. And that's actually a fairly broad category in there that includes things like electric, water, your telephone, your cell phone bill would qualify as well. So you can include those in your caption. And as long as
Glenn, I would like to add something, and is that they have to be very careful with their books and just support. You can, like, everyone can like forgive the loan like 100%, but they have to show the supporting documentation. So the supporting documentation is key, and this is proved through their books. So they have to be very careful on that.
Yeah, exactly. Good emphasis, Carolina. And that goes back to that document. And so make certain that you're keeping good records, or if you've got an accountant, get with your accountant. And if you're using QuickBooks, I think QuickBooks has got features inside of there to track this already. So because there's so many loans out there and there's so many people impacted by this, I would think that any accountant, bookkeeper, or bookkeeping system has got some accommodation for tracking this information. So check into that. I also think this is a good time for you to maybe, if that record keeping hadn't been your strong suit, maybe this is the time to maybe tune that up and use that going forward as we go through recovery. This is a time for you to maybe pivot your business a little bit about how you manage your financial records, and this is a great time to tune that all up and see if you could implement best practices going forward. But definitely keep the documentation in place. It's very important for you. You don't want to miss out on loan forgiveness, and you don't want to be in a position where you don't have that documentation.
Mm-hmm. Glenn, I have another question here. If the bank we normally work already closed the application period, is there a way to do it with another one in which we don't have bank accounts? So I can talk based on my experience. Yeah, you can do it. And if you send me your contact information, I can provide you a CDFI in California, in San Diego, that can help you to process your PPP application, but make sure to apply and send all the information before Tuesday, because they are closing the application period by Wednesday morning. So I don't know if you want to add more information to this question, if you have other source of other sources, Glenn?
Yeah, I'll send along another link. There are what generally referred to as fintech. These are online lenders. So this would be like PayPal, Quicken, which owns Quicken Loans and QuickBooks, Cabbage. There's probably 15. I've got a link that's kind of a clearinghouse link that will directly link you to those fintech lenders. And they were very active, have been very active in this second round of financing. And I've heard that they actually, I've heard as quickly, 1 day after application, money is in your account. So they can move pretty quickly. And we've also had instances where people have applied to multiple fintechs and got multiple loans. That's how quickly they act. If that happens to you, give one of them up. You can only have one PPP loan. So if for some reason you do go on the fintechs and and click and apply on multiple platforms, just make certain that if you get an offer from more than one, you only accept one. You can only have one PPP loan. But it will send along a link that'll let you go with hypertext links over to those websites where you can apply. I'm surprised to hear in talking to one of the bankers that I work with here in Gwinnett County that they had actually been referring people over to Cabbage. Cabbage does this as well, and basically because they were funding fairly quickly. I think they were the ones that had actually funded within a day. Now again, don't forget that June 30th date. Don't take what I'm saying is, oh, I can wait till the 29th. I would not do that. I would apply much sooner than that, but I'm trying to use that as an example of how quickly they can move. And there are options out there for you. And we'll provide you with a link to that.
Okay, next question. And actually, I'm going to send the link about the bank in California that I just mentioned to everyone. So I have another question here that say, are we going to have access to the presentation? Yes, we will send the presentation after this session. Let me see, open questions. So application asks if you have multiple businesses. If you do, can you apply for each business?
You can, as long as you have a separate, they're going to look at your EIN. So if you have a separate EIN for each business. Now, if you're operating separate businesses under one main company, and they've got different names, you've got DBAs going on underneath it, but using the same EIN, you wouldn't be able to do that. But as long as you have a separate EIN number that's redundant, you have a separate EIN for each business, you can apply for each business. I know some people who've done that because they're treated as they are. They're separate businesses. There's probably separate employees. There's separate cash flows that come out of it. As a result of it, you can apply for those if you have those separate EINs.
Yeah,
businesses with separate EINs.
Mm-hmm. Yes, I have different Hispanic clients that owns different, like multiple restaurant locations. So if they open a corporation and each of the restaurant is under a different LLC or DBA with a EIN number, they must to apply separately. But if they have multiple locations under the same corporation and only one EIN number, they cannot do it. So thank you for the clarification, Glenn. The next question that I have here, just bought a business that was established last year. Can I apply?
Yeah, as long you needed to be in business by February 15th. Again, that February 15th is this gateway number. As long as you're in business by February 15th, you can apply for PPP loans. Now, what they're going to do is they're going to look at payroll that you had incurred. Now, generally speaking, what people did is they went back and they looked at 2019, the entire year, and they calculated what their average monthly payroll was during 2019. Well, obviously, if you started last year, you can't do that because you were only active for a partial year. Now, what you can do is you can go back for that partial year and you can calculate your prorate. So if you were there for 6 months, you just take your total payroll and divide by 6 rather than 12 because you weren't in for 12 months. Or you have the option of going to a January, February. You can look back to just January and February of this year and calculate your average monthly payroll for just those 2 months. So you might look at those two numbers and see which one is going to give you the best result, the biggest PPP loan that you can apply for. But the reason they put that January, February timeframe in there was to accommodate somebody who maybe hadn't been in business for an entire year. So those are your two options when you go to apply for a PPP. The document that I will send you that's got the line diagrams shows those different test periods. One other thing I'll say is if you're a seasonal business and you're more of a summer business. Let's say you have a landscaping or you have a house painting business or you run lifeguard services or something like that that's very seasonal, summer seasonal. They made a modification that allows you to look at a May 1st to September 15th timeframe, and then pick any 12 weeks inside of that time frame for your calculation. So you could actually go back in and look at that and say, hey, this is on the application side, most of my headcount is in the summer months. And if I take that over a year, I'm not going to get enough money to be able to give me the extra money I needed to get through the crisis. So they did allow that for the summer seasonal businesses. So that's another option for you to take a look at as you're calculating your PPP, your average monthly income, or excuse me, average monthly payroll for your PPP calculation. So that will be on one of the charts that I've got you, that I'll send to you in that separate line diagram, that separate PDF. So take a look at that. If you have any questions, get with one of us and we can clarify that for you.
Okay, I don't have more questions for now, so please feel free to submit your questions.
Let me add one thing. I don't know if I mentioned this, but the idle portal for the disaster loans, which was actually the first program that was introduced. That's a loan that you get from SBA. It's not a lender loan, it's an SBA loan. And by the way, idle applications can be made through December 31st. So it does not have that same June 30th deadline that we're fast approaching. It has a December 31st deadline. So we've got a little more breathing room on that. These are the disaster loans that go for up to 30 years. As a matter of fact, every loan I've seen that comes out of there is a 30-year loan. It's a fixed rate of 3.75%, and it has 1 year of deferral, so you don't have to pay on that loan for a full year. So again, it's a nice complement to PPP, and if you haven't applied for EIDL previously, in that second round of financing that came out, it had been limited to agribusinesses only. That restriction was lifted earlier this week. So now you can go back into the EIDL portal and you can apply for the loan for an EIDL loan or emergency injury disaster loan. And it is that has been reopened to all businesses. So that's another thing to be thinking about. And actually, I think those two loans, the EIDL loan and the PPP loan, actually work nicely together, because one's got a long-term repayments, fixed rate, 3.75%. Pretty attractive loan if you can qualify for that. That has been limited to $150,000. The EIDL loan has been, but if you have a few employees, I've known some people who got only $30,000 in PPP loans and got $150,000 EIDL loan. So those two actually do work very nicely together. So that portal's been opened up again. So if you had not applied for EIDL before, it's now available to you again.
I don't have more questions, Glenn, so.
Well, thank you for your time. Don't want to cut off questions if you've got them. Please feel free to ask them. We're here to answer. I know we've got a few more minutes left, but I'll just reiterate a couple of things. One, I'll mention again the June 30th date. Just make certain that you apply well before that, just so you aren't into up against a deadline that you just can't make. Funds are still available inside of that PPP fund. I think it's over $100 billion still available as of last week. So I do think there will be people rushing at the last minute to get the loans. I think with the new Flexibility Act, the relaxation of 8 weeks to 24 weeks, it's far, far, far easier for you to get total loan forgiveness. There's not another program coming down the pike that I can see of. We talked about that Main Street Loan Program. It does not have a forgiveness component to it. It does not have some of the other features that PPP has available to you. So if you think you need some help and you haven't applied for the PPP loan, I encourage you to do that. And again, there are these other links we'll send you. So you have, if your existing lender has either shut down their portal or just it wasn't a good fit for them, there are options out there for you. So we'll provide that information to you. I just encourage people to apply, because you always have an opportunity to turn them down. And if you're not, it's one of my favorite sayings is the great hockey player Wayne Gretzky always famously said, "Every shot I didn't take didn't go in." If you don't apply for the loan, you're not going to get it. So I would say apply. You can always make the decision to not accept it. and you have a little bit of time to do that. In fact, with an EIDL loan, you actually have a couple of months to decide whether you want to take that loan or not. So, you know, get in the game is what I would say, and then make certain that you take advantage of it. It makes some sense for you.
That's right. Thank you so much, Glenn, for your expertise and for spending this hour with us. And thank you to Santiago, Gabriel, and Ish for the opportunity. We will provide this session in Spanish in the next week. So thank you so much. And if you have any question, you can email us or you can visit one of our 17 offices across the state. Thank you, Santiago. Ish?
Yeah, thanks so much to the Hispanic. It was a real pleasure to be here today, and they will continue to be a good source of information for you as you go forward. So they continue to be, you know, listen to them, participate in webinars that they've got, and I'm sure we'll have an opportunity to talk at some other times in the future.
Okay, thank you so much. Bye-bye.
I appreciate it. And Santiago,
So long.
bye-bye.